Hello and welcome to this week's episode of Homescreen. Today we're going to be talking about SRI investment products. So how people are starting to think a little bit more about investing with a conscience. Today I'm joined by 𝗪𝗀𝗲𝗀𝗲𝗲𝗲𝗲, who is another member of the 11FS Pulse team, and we're going to take a look at two particular journeys. 𝗪𝗀𝗲𝗀𝗲, what are we going to be looking at?
Yeah, so we're going to be taking a look at Tickr, the investment platform, and particularly the journeys around creating a portfolio and also adding funds to the account. And these are both included in the onboarding journey.
So an onboarding flow, and there's two separate experiences there we're going to map, and we're going to see how those directly relate to the experience of investing in kind of these socially responsible investment funds that are making a load of money at the minute. As always, this show is brought to you by the team behind 11FS Pulse. This is the market research platform we're building here to help you understand how banking apps and websites are built. It's essentially a peek behind the window at all of the best bits and the worst bits of how your competitors are doing, and helping you to understand how to build market-leading propositions. Cool, so we're going to kick off by talking a little bit about the context around Tickr and what they're doing. And then 𝗪𝗀𝗲𝗀𝗲𝗀𝗲𝗀𝗲 is going to talk to us a little bit about what the actual flows represent, and then we'll round up with a few concluding thoughts.
Jim, why don't you just start us off with telling us a little bit about what Tickr does?
So Tickr is an app that's kind of making it a little bit easier to invest in the global companies that have a kind of more direct relationship to socially responsible investing or good corporate practices, solving environmental problems, that sort of range of things. They offer these ETFs or exchange traded funds, which are kind of smaller de-risked bundles or buckets of funds, and those will fit within three kind of buckets. So there's a disruptive technology, equality, and climate change. So they're very focused and very specifically oriented around three socially responsible investing categories. These are unmanaged, so most kind of stock options that you'd see would be managed portfolios. Basically, you get given what you're given, and then there's less kind of movement in the market to kind of switch these out for different performing assets.
So you just mentioned that socially responsible investments. Can you just tell us a little bit more about what they are?
Yeah, so this is a strategy that's kind of started to develop over the past few decades or so to encourage people to invest in companies that have in some way a socially responsible angle to their kind of portfolio. If you were to take the extreme example in a climate change context, that would be investing in organizations which are directly influencing climate change. But that could also include things like, how do you invest in companies that have generous policies or subsidies towards staff that relate to climate change or something like that. So it's anything which is related to, in some way, a social, environmental, or workplace sort of change. And this is kind of what those three topics that are covered by Tickr include.
Okay, great. And what kind of markets do they play in?
Tickr is involved in the UK market, so it tends to kind of access funds within the UK. So they list on their website kind of big market funds like Legal & General, 𝗪𝗂𝗪𝗲𝗀𝗀𝗀𝗲𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 like a bundle or an ETF package. So they kind of will tend to stay domestic. They're still a pretty fresh startup, so they're, I guess, narrowing their scope and keeping it kind of to the ground. But the UK market is pretty good in terms of supporting innovation and social environmental change.
And that comes from a government level as well. There's an element of government support going on, right?
Yeah, so I guess originally the idea of investing in a socially responsible investment package would be difficult because the value of those stocks might not necessarily be high unless there's government subsidies or government support. But the UK and the rest of the world really gearing towards investing in socially conscious or climate conscious businesses. For example, the UK is heavily involved in the Paris Climate Accord from 2015. And it's also really looking to take a leadership position during the COP21 discussions this year. That's the group of nations which is coming forward to kind of rediscuss where their position is around climate change, but also huge investment from overseas as well. So China's net neutrality position, which aims to get them to net neutrality by 2060, a huge state of intent for that nation, and all the technology companies coming from China will also be adhering in some way to that sort of promise. So that means a reduction in the number of coal industry businesses, a reduction in technology companies with less terrible gender practices and so on like that. It's just a general move towards good practices, and that makes those stocks more valuable.
Okay, right. And I know you wanted to talk about 𝗛𝘂𝗹𝗀𝗲𝗲𝗲 SRI funds in particular.
This is the kind of a really interesting stat that we found when we were taking a look at it, which is Morningstar, the fund tracker, found that by the end of 2017, there were 234 ETFs and mutual funds that purported to invest in companies that were considered socially responsible. And that means, as we mentioned before, companies that have either good working practices or themselves try and solve very direct social problems or kind of environmental impact. So one of the problems that happened in the early days was this idea of greenwashing, which is a term coined in the 80s to describe kind of these efforts to emphasize green credentials without actually having any proof for what those kind of credentials were. And so every single sort of stock asset will have to have some form of qualification or some data behind it to say that this is a verified source, and that it is actually a high-performing asset rather than one that's been greenwashed. And then, so what that means is that we're able to access really sophisticated data sets. MSCI is a really good example of that, which kind of actually shows how successful these products are in actually being compliant with these social incentives.
Okay, and why should we care about this right now? Is there a particular reason why we're talking about this at the moment?
I think for anyone who's building products, the idea of reaching an SRI audience should be obvious. Mm-hmm. Whilst maybe an older cohort or an older generation might favor kind of higher performing assets, I think there's a group of kind of a generation that's coming up in their 20s and 30s now, which really would prefer a general kind of SRI investment strategy rather than higher returns. They're people who are typically more consciously aware of their own footprint in the world, how what they do matters in a global context, and trying to make things a little different. Morgan Stanley's Institute for Sustainable Investing reported that people in their 20s and 30s are now twice as likely as the general investor to kind of focus on SRI products. So that's double the interest that we might usually have.
Yeah, I think just to add to that as well, we have seen a kind of surge during the past 9 months or so during the lockdown, where there's been other kind of socially interested things going on around Black Lives Matter or the environment, where people have actually kind of really taken notice of these kind of investments a lot more, and they have performed quite well. And encouragingly as well, we are starting to see people in their 40s and 50s engage with these investments a lot more than we have done previously. Whether that's because they're starting to outperform a lot of the less ethically minded ones, we're not sure, but it's an encouraging trend. So it's not just the kind of young and woke that we're looking at now, which is a positive thing.
And you would expect that from from a market which is like socially responsible investment products have heavy government support and government subsidies. So you'd expect them to start performing really well at the minute. But just to round up that thought, the interesting thing about this sort of generation of younger investors is that whilst maybe an older group might favor kind of more direct stock options, younger investors are less interested in doing doing that research into actual stocks and more interested in the kind of the sentiment around those stocks. So they're investing in kind of these packages or, as we mentioned before, exchange traded funds, bundles of stocks, which can come together to actually create a portfolio for them. And we can see that people value the value that those bring from their own welfare and from their own self-understanding the actual value of the assets themselves. So it's a nice, neat balance at the minute between government support and government structure around those investments, and then also people getting a lot of personal value out of investing in those socially responsible things. But now we'll take a look at how Tickr actually works.
Yeah, we're taking a look at creating a portfolio, which happens after the initial KYC step of the onboarding. So the user's already put in their email address, has verified via two-factor who they are. So this is just about really kind of personalizing the investment experience. So as we can see here, we're about a third of the way through the onboarding, and they're really sort of tailoring the investment to the user's needs. So we've got the different account type here, 𝗤𝗔𝗍 supported, as you can see. They've got a very nice and distinctive visual design. And now we're through to the different types of accounts. 𝗤𝗔𝗍 there at the top, general investment account and junior stocks and shares. So there's some real tax incentives there.
Yep.
You might also notice that the visual language is very similar in that screen, for example, to Moneybox. So I think they've taken some really good aspects from there. And now we're through to the investment theme. So based on the kind of things that the user cares about, the investment can be chosen. So disruptive technology, interestingly in there, kind of low carbon emissions on that, touching on the climate change one that's there at the top, and some more socially conscientious minded ones. So it's good to see a combination of options there at the bottom as well. If the user kind of touches the kind of values that the user has, touches on a few of these. So it's a good range there, but it's not overwhelming the user with choice.
Yeah, exactly.
So now we can go through to the risk profile. Again, this is going to be familiar to a lot of the Moneybox users, and it just doesn't overcomplicate the process. And then you can see the breakdown of the portfolio there.
Yeah. So as I said, these are ETF bundles, typically these portfolios, which will have a mixture of different asset classes in there. In this instance, we've got government bonds. We know that government bonds, what we were talking about before, really successful because they're safe, they're well-backed assets. It's basically a guarantee on government debt, which means that we have security from the fact that this is government issued debt rather than a private company's debt or whatever. Other interesting thing there, bonds that coming, green bonds here, cybersecurity, automation and robotics. These are high areas of impact. These are areas that are being invested in really heavily. And then digitalization, 11FS is involved with this as a business practice. You know, there's a lot of private company interest in digitalization. And so it's quite a safe bet there in terms of the investment that's going into it.
And then we just round off this section so that once the user's happy with what they've invested in or plan to invest in, they can proceed through to the next section.
Yeah, nice little ticks there to signify all the steps being kind of completed as well.
The next step is adding money to the funds. And this just happens moments later, but it's a nice kind of, again, it's that very distinctive visual design, kind of dark background with quite vibrant colors overlaying it. And the user can invest right from the get-go. Yep. Always good to see them investing before they register fully, just so that they can kind of get themselves set up. And they're kind of encouraging the user here to make sure that it's a regular investment. It's not just a one-off. It's actually something they contribute towards regularly. Again, in a similar style to Moneybox, a lot of the flows and layout is really catering towards that, constantly adding more.
Yeah. So it looks like we're using Stripe here, by the way. This is Stripe's software development kit we can see in the design. That means they're using their payment rails to ensure that direct debits are being collected. On an interesting note, this is just for people who are interested in kind of the open banking market in the UK. Yesterday, Open Banking Implementation Authority actually announced that they're going to be moving forward with what they're calling variable direct debits, so variable rate payments. That will mean that the provider will be able to actually get your permission to send a different amount per month. So if you had a user who maybe needed to top up a certain amount a month, then you could sort of introduce some flexibility in how much they would be introducing. So that's like the third stage of open banking.
Yeah, so we're also seeing some, it's called optical character recognition. It speeds up the process. You can just scan the card and then it auto-populates some of the fields with just a couple more to add. So this is something that we're seeing more and more often, and for good reason, because it takes through that kind of pesky step where you may miss out a character, and make sure there's no drop off there.
Yeah, and really interesting to note there that like Tickr, as a very small company, will use payment infrastructure that's already been built, so they're not having to rely upon that themselves. That means that they're able to essentially get on with the real job of like creating these asset classes and outsource the payment infrastructure to a company like Stripe, or maybe 𝗪𝗪𝗀𝗀 in some instances could do that as well. These kind of companies that are really specialized in providing payment infrastructure.
And just to note, hats off to Tickr there. That was the key two components of their onboarding, and it was really very smooth and very quick to set up. So well on to them on that.
So just to round off then, I think it's really good for 3 reasons. There's a real focus on themes within this, so that the option is not too overwhelming. As I mentioned before, this is responding to a sort of demographic kind of shift towards socially responsible investing, and those people tend to be 20s and 30s. They're used to a very kind of they don't want to think too much about the actual stock actions themselves. They more want to think about the impact they're having. So having 3 themes gives clarity, and then also that's kind of mirrored in the fact that there are 3 risk profiles as well, to give you that ability to very simply move through what you want. And this is kind of very much like an introductory or entry level kind of introduction to that investment platform. Second is that the design language, as Colch touched on there, is like really fluid and really well kind of met in that market. A lot of people will always talk about like dark mode. I've actually been really kind of overwhelmed by how many people talk about dark mode as a thing. Like the ability to switch your screen from white to black is a real kind of like UX sort of tip that most businesses don't maybe pay enough attention to. And then kind of the fact that this is an ETF means that it's quite low risk. So it's pretty perfect for this market of maybe young, precarious people with less money, but that actually do want to make a difference in kind of the world, but don't want to kind of, obviously capital is always at risk when there's investment going on, but this is something which is allows you to kind of diversify that risk and to kind of care and make sure that you're still caring about those causes.
Yeah.
So what's going on next with these products, Colch?
Well, I think we're going to see more and more people using products like Tickr, and we've seen some of the other investment platforms like 𝗛𝘂𝗹𝘀𝗰𝗿𝗲𝗀 and 𝗛𝗏𝗃 start offering these products as well, so that they'll have NSRI kind of investment products alongside their traditional ones. I think Moneybox have stepped into that area as well, just because they've noticed the kind of appetite for them. Yeah. But we've also seen Tickr kind of develop their product range as well. They've now got a carbon offset feature. So it's a subscription that you pay to, and you can either go carbon neutral, carbon positive, or carbon hero. And it seems that there's a kind of social sharing aspect in that. So you can kind of talk about that, and it's an interesting spread the word on that. So we're going to see more and more interesting features in this area, and I think it's a really exciting area in fintech generally. Kogo, for example, they recently partnered with NatWest, and they let users track their carbon kind of how much carbon they're using based on their spending, which is a really, really interesting product, and lets people keep an eye on their footprint.
And in other episodes, if you wanted to see how these products are built, we recently spoke to 𝗛𝘂𝗀𝗀𝗀𝗀 in the Netherlands, who have built a really compelling climate-based kind of add-on to their card services. Then we also, a few weeks ago, spoke to 𝗛𝗏𝗃, who have specifically dove into the detail of socially responsible investing. So check out that episode. But we'll be able to show you a little bit about how they built socially responsible investing packages, how that kind of factors into the way that they build other things at 𝗛𝗏𝗃, and generally what the response has been like to what they've done with that. Colch, do you want to read us out?
Yeah, thanks for watching today's episode. If you haven't already, go follow our YouTube channel so you never miss an episode of us. Also, if you want to see more journeys like this, head over to pulse.11fs.com to find out more. Thanks, guys.
Thanks very much. Cheers.